Okay, so let's do the other one, which was the Ethereum. So you can see, and actually, when I finally make this public for my GitHub, I'm going to have this done with Ethereum as like the base CSV that you can, where it assumes you're going to start. So let's paste that in there and run everything again. So just a reminder to everyone, right, that you always start with the GUI. And so this is the historical price data for Ethereum. I'm sure we all remember when it peaked at very close to $5,000. And we have what looks to be about, slightly over 2,500 data points here. And so I think what 0x was asking is, like, what can we do to sort of to simulate a bad situation, right? Like, what would be if something's in like a strong downtrend or a strong uptrend, how do these protocols perform against each other? And so 0x, if you're still on the line, do you want to tell me sort of like where you would what you would like me to do?
Yeah, so I think I'm kind of at a loss of how to trade a chart like this with fixed price ranges. Like my thought would be I'd want to play like a moving range, something like a Bollinger Band.
Yeah, that's actually, I'm really glad that you brought that up because it kind of validates something else I've been working on for a little bit, which is that having these horizontal bands is not perfect for all market conditions, especially if you're going to set up something for a long period of time. It's important to have these ranges sort of slant in some direction. So yeah, it's a very important observation, and so I don't want to to dismiss it. And unfortunately, with the protocol as it exists right now, we can really only trade high and low on a flat scale. But I think maybe we can at least agree that with a situation like this one, that I suppose a Uniswap liquidity provider would probably think that something like that mightn't be too bad. Like they didn't call be aware this is a logarithmic scale, so this is they're going to have catastrophic IL when the price goes up to here. But would you at least agree that like something like this, someone would be like not necessarily disappointed with, like they kind of captured, this kind of sideways component of whatever it is that they were trading. Like, would you be satisfied with this?
Yeah, exactly. Yeah. A lot of people would have missed that top if you'd like set that range, like 2 years ago.
Yeah, exactly right. And so, like, if we set this up, like, would you do you want me to move this, or are you happy if I move on with this setting?
No, I think that's fine.
Perfect. And then for Carbon, we can set it up either the same way, or if you like, I can move things around. Would you like me to keep it the same?
I think the same makes sense. Like I don't have much more intuition how to guide it. I think one question I have is, so here the upper and lower bounds look they're about the same. Does Carbon force like an empty range in the middle where it takes no position or it's neutral or something like that? It looked like it was doing that in the animation.
Yeah, it does. So the best way you can think about it is that these 4 different price levels, the topmost and the bottommost, these are your buy and sell ranges, and each one is represented on a separate curve. And so so here I can show you when we actually move into this next part. The simulation isn't going to let us start with any USDC here because it would get immediately arbitrage. But essentially, when the price is moving up through this red range, that's showing us that it's going to be selling ETH right at that position all the time. And so when it moves out, right, it's now run out of ETH. But as we're selling ETH, this green band will start to fill up, right? And that's the USDC that the ETH is being sold for that's being added to this range. The thing that makes Carbon different to other concentrated liquidity protocols is that it will only fill up to wherever we set that middle slider to. So, if we set it down here, it would only fill up to that level. And And you're right that it will forbid one of these going above the other, right? You can get a weird type of behavior that if you're not entirely familiar with how carbon works, if you set an overlapping range, you can actually get exploited. And so that's forbidden from the launch of the protocol. But there is a way to do it. And actually, Stefan, our chief economist, is going to demonstrate this, I think, on a Twitter thread relatively soon, that you can actually use carbon to completely recreate Uniswap v3. So you can actually have the red and the green completely overlap with each other, and then they will actually chase each other in perpetuity, the same way that Uniswap v3 does. So you can technically do it. It's just that for a brand new protocol that's kind of unfamiliar to the industry, it might be dangerous to let people play with that overlap because it can set up a vicious arbitrage cycle that can financially harm the liquidity provider, and we're trying to avoid that at least until people have kind of got their legs under them. We've got a stronger culture of how to use the protocol under us.
On the when the animation runs, it looks like there's kind of like an uncolored portion for carbon, but I guess it's not the right way to think about it. That like you're not making money in that range, you're actually still benefiting.
Yeah, exactly. Yeah, because you have to remember, like sometimes not selling your thing, right, is more profitable than selling it. And that's the key difference, right? Carbon waits until it reaches that price boundary that you decided to sell, whereas on Uniswap v3, it will sell at any price inside the range that you chose, and it will buy at any price inside the range that you chose. And so this is the thing that gives Carbon that limit order like functionality, whereas traditional concentrated liquidity protocols don't. Like they only have a limit order function if you're fast enough. Whereas on Carbon, it because each curve only trades in one direction, it's actually a true limit order. It only becomes a part of an ongoing strategy if the price happens to re-enter your buy range, which in a lot of the simulations we're doing here, it makes it look kind of like that happens all the time. But note here that the bottom of this buy range is like 996. And the top of this buy range is like the top of this sell range is like 2032. So even though in crypto, of course, this can happen in a single day, and this particular candle looks like it actually did happen in a single day, but in general, you can imagine you using this to play out over much longer time periods. So decide to buy something after it capitulates more than 50% or between 50% and 90% capitulation. And then sell it again after it 2x's, 3x's, 5x's, or whatever. So it's a completely different sort of thing. So you're right to observe that when the price is moving around inside that black region, the protocol isn't performing any trades. But sometimes not performing a trade is more profitable than performing one, and that's the niche, right? That's the difference. That's the agency and control that you have in a protocol like Carbon that you don't have on a protocol like Uniswap v3.
It's fundamentally different because Uniswap and basically every other AMM makes no money off price movement, but makes 100% of its money on just being in every trade. So you have to chase the range, and you want to capture every single trade that happens. You want to be in range, but that's fundamentally different here, where you're not fee revenue is not your main profit source, and it's actually the price changes that you care about. Sometimes you want to sit out on a trade, which is
exactly
never the case on Uniswap.
Yeah, exactly right. It's not about how much volume goes through the protocol. It's about how profitable those trades are, right? And rather than the protocol deciding, the user decides. They choose when when what their price targets are and how they want to trade stuff. So yeah, it's a completely different paradigm. You've done very well to observe that. Okay, so here's our new starting conditions for that one. And let's go ahead and put that in the simulator and see what we get. There we go. And in the meantime, maybe we can have a look at, what was the last one we just ran? The last one we just ran was the
Modified.
modified. Okay, so let's have a look there. Yeah, and so just to remind everyone, right, this log is like super valuable. So this is one we did when we were just analyzing Carbon and Uniswap v3. And here, right, where you can actually see it reporting exactly what I was just talking about with 0x, right? You can see that it's telling you that the marginal price quotes in Carbon are, right? You can buy MIM for 0.99 USDC, or you can sell MIM for 0.999 USDC. And then it tells you that the market price of MIM is 0.994. And if you have a look at these two numbers, what you can see is that market price is right between them. And it tells you that, right? The market price is within the spread on Carbon, therefore the arbitrage has nothing to do. Since Carbon is already at equilibrium with the market, no trades were performed. And then it completes the analysis. And you should expect that, right? When you're doing these analyses, this is, I would say, like half of the course in Carbon, because it waits, it's patient and will only execute that trade after it's reached that particular price threshold. It doesn't care that the price is moving. It will quite happily let your portfolio increase in value because the price of the TKN is going up, and then sell it only when you've nominated it. Whereas in Uniswap v3, you'll find that that's almost never the case, right? Essentially, every time the price moves, it necessitates a trade on the Uniswap v3 protocol in order to bring that protocol into equilibrium. So you can see that happening again. Okay, here, so actually, here we actually did get a trade on Carbon. We get another trade on Uniswap. And then here again, Carbon, it says that after the market price moved from 4.9s to 997, that is within the spread on Carbon, so nothing happens. But on Uniswap v3, that tiny change, okay, in this case, for Uniswap v3, it's also within the spread. And this comes back to something that we said on our Twitter Spaces recently. That again, I still feel I need to say this again and again. Uniswap v3 has a spread. You can't just use the marginal price the way that it's reported. You need to adjust for the fee, and that means that there is always a slight difference between the price that you can sell something and buy something from the same liquidity pool there. And the simulator knows that. And so when the market price is between those two numbers, as it is here, just as it did for Carbon, it will tell you that there is no trade performed. And so coming back to the theory of the simulator, I will elaborate on this in much more detail when I write a Medium article on it. But what we're doing here is we're choosing a price and then letting the price determine the trade size and the trade volume, not the other way around. And so in order to get more volume, all you need to do is choose more prices that are farther apart, and that will give more volume to the protocol because it means that more trades will need to be performed. But it doesn't change the frequency because the simulation is essentially time independent, right? There is no consistency between how much time has passed between these updates to the price. So when you see a timestamp move from 4 to 5, you have no idea if this timestamp moving is 1 minute or 1 hour or 1 microsecond, or even just the next trade inside the same block, right? So it can even be 0 time. And I just want to make that perfectly clear that we're not necessarily trying to perfectly capture that time dependence of a normal price chart. We're actually doing something a little more helpful, right, in terms of understanding how these protocols operate. Okay, let's see where we're up to. Okay, that seems to have finished, I think. All right, so this is our, we now go looking for our ETH chart. Ethereum. Okay, so let's check the Uniswap one. Okay, so you can see that exact behavior I was talking about before. As the price moves up through this range, it is, it's earning fees, quite decent fees. But notice as well, okay, let us start again. Notice as well that when it's moving up through this range, because the price of ETH is moving, the performance versus HODL is actually going down, right? And this is one of the things that I noticed when I wrote the this research report that we did on Uniswap V3 and permanent loss a couple of years ago, is that people usually just see these fees, right? They see these bars going up, and it means that they sort of become blind to this downtrend of their portfolio value overall. But of course, this is going to reverse itself when the price of ETH starts to drop again. But it does mean that through this range, and this is quite a wide range, right? This is $1,000 to $2,000. But it does mean through this range, because they were selling their ETH off all the way up, they would have, they would have done less bad, I think is the best way I can say it, if they had moved their, their liquidity closer to the top of this. But that also means that they wouldn't have had all of the fees from this wiggling, right, from this roughness of the price on the way up. And so this is kind of the battle when you're using a concentrated liquidity protocol, is that you want to capture, that roughness, but at the same time, if that roughness has very wide boundaries, as it does with things like ETH and Wrap Bitcoin and Link and BNT and so on, you need to set a pretty high spread. Now, a pretty high range, a pretty wide range. Now, 2x is very, very, very wide, and I know that after people see this video, they're probably going to complain that wasn't particularly fair. Maybe I should have brought this up around about to here. But be reminded, if you want to run that simulation, I'm giving you this software to do that, so you don't have to wait for me to do it for you. But I think we saw, Jen, did you see where this maxed out?
I did.
It was about
it went down to like 70, but then it ended at break even, which is just brutal, because if you withdraw your liquidity at the wrong time, I mean, anywhere from 0 to negative 70%.
Yeah, remember this is versus HODL as well. So if we just gave this a US dollar value, you might even come to a different conclusion, and that's probably a chart that I should add. But it is nice to see, right, that you can, like, this performance versus HODL chart is nearly like a perfect inverse of the actual price chart, which is something that that people generally haven't, or have learned the hard way, I should say. So let's check Carbon. So remember, we chose exactly the same range, but it split the liquidity between buy and sell. So you can see already, like, it's not doing too badly. Sorry, it's because it's such a long GIF, it has to reload. You can see already in that first little, thrust, right? Carbon's already like up to, it peaked at about 15% up here. Now, because Carbon, it has the same folly as other concentrated liquidity protocols. Of course, you would have done better holding ETH rather than selling it. But as 0x, has already pointed out, a lot of people would have missed this top, right? And so selling it back here at like 2K is not necessarily obscene. So yeah, maybe you're crying here, and on Carbon you still would have been at a minus 60% had you sold everything here. But then you'll see as this comes back down, because it waits to buy back here, you can see that actually we've ended up at about a plus 45% compared to what was it, Jen? What did Uni get for this video? 0, right? And here, look, yeah, it's night and day, right? So like this is kind of what I'm talking about. So Uniswap absolutely wins on the stables, like it's getting it's getting phenomenally good fees and volume when you're doing stable to stable. But for the volatiles, right, for the things where you actually do have an opportunity to buy something at a relatively low price and sell it at a predetermined high price, even if you miss it, right? So in this particular simulation, like we did miss it. Here, this liquidity provider on Carbon with this strategy that is nearly identical to the one that we had on Uniswap V3, both of them, are crying right now because they like sold all their ETH at 2,000 when they might have been able to sell it closer to 5,000. But as this comes back, you've got to think about the ETH hodler that didn't sell at all, and has still got all of their tokens in ETH. When this comes back and revisits this range that we set up, the liquidity provider on Carbon is actually ahead by a very, very wide margin, right? So, and that's the point of having this chart evaluated versus HODL, right? We're comparing it to someone who's just held ETH this whole time. And so, maybe this person who sold ETH could have sold the top. And that's not necessarily a fair comparison because I could force the simulation as the Carbon trader to sell their ETH at that stage. But the important point is that even with these very, very volatile ranges, and even with these deep capitulations and huge moonshot runs where you might be kicking yourself that you didn't hold on to ETH a little longer or sell it a little higher, overall, it still performs pretty well, right? Let's have a look at how that actually ended up. Yeah. So on that particular strategy on Carbon, on the actual ETH chart that we picked up from CoinGecko, using a user nominated strategy, sure, it went down as low as -60, but at the end of this period, the strategy is already up 2x compared to HODL, which is a big deal in my opinion. And when we compare that to a standard concentrated liquidity product, such as Uniswap V3, and I'm using that because it's the industry leader, right? We all know that there's a couple of other options. Yeah, in that same range, it went down to -70% and is mostly at break even. Right? At the end of this process, it was actually at -10%. So there is like stark difference here. Right? We've seen examples where standard concentrated liquidity definitely comes out in front, and we've seen examples where it definitely loses. And I think that that's the thing that we need to educate the industry about, right? Carbon isn't an alternative, right? It's not a product that you can use instead of Uniswap V3. It's something that you should use as well as Uniswap V3, right? Both of these protocols have specific situations that they are catering to. And as a trader, as someone who is actually doing stuff in these markets and exercising, your decision-making capacity to try and benefit, there are things that Carbon can do for you that Uniswap can't do for you. And there are things that Uniswap can do much better than Carbon can, and that is more appropriately suited to those types of things. So I think that this was actually an excellent way to round out the presentation. And so if there's, I'm happy to hang out, by the way, if there's anything else that we want to do. But I think that I've been speaking now for what seems like 2 hours, maybe.
2 hours. 2 hours. We also have our community call coming up. So if there are others that we want to really take a look at, and 0x kind of added some comments here. I don't know if you're still up and you want to unmute, you want to voice them yourself, or, we can just read them in the channel. But are you still here, 0x Bear? Okay. He was saying he would have thought the opposite of what the simulation shows. That they'd be more similar on volatiles, and Carbon outperforms on mean reverting, but Carbon profits from the bigger price swings and eating the volatility. So it's kind of, this is so fantastic, like this tool to be able to gain this insight as to what's actually happening and what you're thinking, whether or not it's actually what, the results would be, and how these different protocols perform, especially when it's your liquidity in them,
Yeah. And I wanted to say, like, anyone, you don't have to wait for me to add this to my public GitHub. Obviously, there are things that I want to change because it can be better. But if anyone, if you want to start running these simulations yourself, I assure you it's relatively easy. I've got, Jen, you've been running these for a couple of days now. Have you, would you say that it's a difficult thing to do?
No, it's so simple. It's almost ridiculous. once you get the hang of it, I think it took me maybe 2 or 3 times to just kind of run through it and like, okay, now I need this pickle, and but once you get into your groove, and it's almost addicting in a way. You want to search charts and really figure out what your strategy is going to be. Well, I do anyway.
Right.
Once the beta launches, am I right in thinking this, and what would I have done in this situation? So no, it's not a difficult process whatsoever. No, and
Yeah, and so
the columns that you added really quickly, I just want to tell anybody, if you want to add that extra little bit of volatility, like Mark was showing with the CSV, reach out to me and I can walk you through that if this isn't up on YouTube yet. If you want to start getting some CSVs together, then I can help you with that as well.
yeah, and I'll eventually build that as an option to the simulator as well. Like if you wanted to add those 3 columns or whatever. But I think because it is subjective the way that you do it, it's almost better to do it hands on. And yeah, the way that Jen will walk you through that process, I think is better than if I was to generate it myself. But yeah, if anyone wants to do this, as you can see, it's ready to go. It's just, it kind of looks frightening because you need to scroll through, a whole bunch of text. But really, it's just about copying and pasting, different file names into the very last cell in these things. So if you want this resource, I'm happy to give it to you. Just be aware that it still has, every once in a while, some weird bug will surface. But then, if it does, you can also send me your pickle file and and any error message or anything that were generated, and I can help you work through it. So yeah, I would say like it's not like ready for prime time, but for people who are interested, I would say it's absolutely ready. Right? It still does everything that I want it to do. I'm just trying to package it up and make it a bit neater. Some of the code is still a little bit verbose and so on. So it still needs to be tidied up. But it can still do stuff. And so if you want it, just ask. I'm very happy to give it to you, and we can set up a call and work through it together. Whatever you need, I'm very happy to support it.
I've offered to do that with a couple of community members also, so don't be shy. You can reach out to either one of us to jump on a call, and I can walk you through it now as well. So awesome. Well, thank you so much, Mark, and thank you to everybody who joined us. Thank you, Xerox Bear, for bringing your requests and things and for jumping up here and setting your parameters. It was great to actually have someone from the community, from the call, getting up and creating their own strategy versus just us. So definitely, like, huge thank you for joining us today. And again, thank you to everybody else. We have a community call on Monday, so a little less than a week from today, and we'll probably maybe continue with a couple different simulations unless we decide to go a different route. But I will keep everyone updated on that and set an event here on Discord also. So Mark, thank you so much for your time and for creating this tool and for walking us all through it. I definitely appreciate it. I have all the links and things. If you just want to send it to me, if anybody wants this, Xerox Bear, I'd spoken with you about it. It's the alpha build, but I am more than happy to send it on Mark's behalf. So thank you, everybody.
One of the things I'll do as well after this call completes, I'm going to quickly run some of these GIFs, or actually all of the GIFs that we generated. I'll run them through. I'm just going to compress them, and I'll put them in the Discord, in that Discord chat as MP4s. So if anyone wants to, look at them in greater detail or whatever it is, then you can. And if you want other things like the logs or PNGs or let me know.
Awesome. Thank you so much, Mark. And thank you again, everybody. We will hopefully see you on the community call and talk to you in the meantime plenty.
Ciao. Thank you.
Thank you. Thanks, Glenn.